Imagine getting paid not for working extra hours, not for selling something, but simply because you own investments. That's the idea that attracts millions of people to dividend investing. And while it may sound complicated, the basics are actually easier to understand than most people think. Today, we're breaking down dividend investing for beginners, first steps, and showing exactly how beginners can understand this popular investing strategy. Let's get started. Let's start with the basics. A dividend is a payment some companies make to shareholders. In simple terms, if you own shares of a company that pays dividends, you may receive a portion of the company's profits. Not all companies pay dividends. Some prefer to reinvest profits back into growth. Others choose to share part of those profits with investors. Understanding this concept is the foundation of dividend investing for beginners. First steps. Because before you invest, you need to understand what you're actually buying. Many investors like dividends because they create an additional source of income. Instead of relying only on stock price growth, investors may also receive periodic dividend payments. Some people use dividends to generate income. Others reinvest them to buy additional shares. And over long periods, those reinvested dividends can potentially contribute significantly to portfolio growth. That's one reason dividend investing remains popular with long-term investors. Here's an important lesson many beginners miss. Dividends aren't magic, and they're not guaranteed. Companies decide whether to pay dividends, increase them, reduce them, or eliminate them entirely. That's why experienced investors often evaluate the underlying business. Revenue, profitability, debt levels, competitive position. The quality of the company matters. Because dividends ultimately come from business performance. This is one of the most important lessons in dividend investing for beginners. First steps. When researching dividend stocks, you'll often hear the term dividend yield. Dividend yield helps show how much dividend income a stock pays relative to its share price. Many beginners assume the highest yield is always best. That's not necessarily true. A very high yield may sometimes signal additional risks. That's why experienced investors often look beyond yield alone. The business itself still matters. Now let's talk about one of the most powerful concepts in investing: reinvestment. Instead of spending dividend payments, some investors use them to purchase additional shares. Those additional shares may generate future dividends, which can purchase even more shares. Over time, this creates a compounding effect. And compounding is one reason long-term investing can become so powerful. This concept sits at the heart of dividend investing for beginners. First steps. If you're enjoying this video, hit the like button and subscribe. We post weekly videos covering investing, personal finance, passive income, dividend strategies, and practical ways to build long-term wealth. Now let's discuss how beginners should approach dividend investing. One mistake many beginners make is focusing only on short-term results. Investing often rewards patience. Dividend investing especially tends to be a long-term strategy. The goal isn't getting rich next month, it's building wealth over years and decades. Consistency often matters more than timing, and small contributions can grow significantly when given enough time. Patience becomes a competitive advantage. Before focusing heavily on dividends, many investors prioritize financial fundamentals: emergency savings, managing debt, understanding risk, diversification. Investing works best as part of a broader financial plan. Dividend investing can be a valuable tool, but it's only one piece of the puzzle. The strongest strategies often focus on overall financial health rather than a single investment approach. That's another key takeaway from dividend investing for beginners. First steps. So let's recap dividend investing for beginners. First steps. Dividends are payments some companies make to shareholders. Many investors like them because they can create income. But dividends aren't guaranteed. The quality of the business matters. Reinvesting can help create compounding growth. And patience remains one of the most powerful investing tools available. The journey doesn't start with finding the perfect stock. It starts with understanding how the strategy works. And in the next video, we'll reveal the biggest dividend investing mistakes beginners make and why avoiding just one of them could dramatically improve long-term results. You won't want to miss it.